It was another miserable week. 4 weeks since the war started, and it's been pretty darn awful. Sadly for the bulls, the history of oil shocks is littered with bear markets. 20% drawdowns that say raise cash because it's almost never too late to sell something to protect yourself. Today was more of the same. Dow tumbling 793 points, S&P plunging 1.67%, NASDAQ plummeting 2.15%. It's a tough, rough road. My trust is the highest cash position I can recall. But you know what? It is never enough when you have horrendous action like this. It's almost impossible to predict what will happen in the war with Iran. We got to stop trying to do that. Right now, the one thing that's been consistently right is to buy oil stocks. Every time. Every time they're down. Every time they're up. It just doesn't matter because crude is headed higher. That means stocks are headed lower. It's one for one. Please don't overthink it. I say that on Letter X all the time. Hey, oil's down, stocks will be down. And they are. And it was another week when it paid to get out of anything in tech that used to be good. The stocks. The companies are still good, but not the stocks. They're all bad now, including the once loved, now disliked NVIDIA, just 1 week after it showed you its best in-show greatness at GTC. I'm owning it. I'm not trading it, but I know it's going lower. I mean, look, people want proof. They want oil stocks. They don't mind the soda stocks, any pharma stock. And I got to tell you, they like the oil drillers. I mean, that's really it. Tech, nothing. Especially NVIDIA, especially the really despised Microsoft. These are two of the greatest performers of all time, and they haven't been able to what we call catch a bid in what feels like ages. Until oil and interest rates, don't forget those, stop going higher, it really doesn't matter what those companies say or do. They are not going to get love from institutions and individuals, and I think they're beginning to realize that. So is there any hope near term? I mean, maybe there is. What we got to do, we got to go to the game plan for next week to figure this one out. Now, these days, Mondays revolve entirely around the war and ratcheting up in tension. We know that our president said there would be an extension of a bombing pause, but there's still hostilities, which to me means that oil goes higher. And when oil goes higher, we know that the stock market goes lower. I keep repeating that because I want people to be really understanding of what's driving the market down. It's gotten axiomatic, and I don't think it can change because the Strait of Hormuz is still closed, and Iran's missile and drone infrastructure is intact enough to keep it closed, even as we thought that wouldn't be the case by now. Worse, when the president pushed out his bombing deadline, something that would have at one time moved stocks up, it meant nothing. Why? Because oil still went higher, and nothing is more destructive for equities than higher oil prices, demonstrated again and again in history. Tuesday is a day of challenged companies. First, McCormick reports, and this spice stock has become very tough to own. The flavor company, as they call themselves, is said to be in talks to merge with Unilever's food business, which includes Hellmann's Mayo, Coleman's Mustard, and Knorr Soups. If they do the deal, the combined company will own some big chunks of multiple supermarket aisles. But the food stocks have been quite simply awful, including McCormick, with a stock that's down 22% for the year. There's only one way out of this jam, though. They've got to merge and cut costs. I think that we'll like a new McCormick if they do merge, which can slot their brands through its own delivery methods and save fortunes. I love the combo. I hope it works out. I hope they announce it. After the close, we have the most controversial stock of the week, Nike. Now, we own this stock for the charitable trust, and we're nervous. And that's exactly what I said in today's monthly CNBC investing call. There's no line of sight for Nike to return to greatness, at least not yet. China has proven to be intractable. The competition has become fevered, and the inventory from the old regime somehow still seems to be dogging the company. It needs to be gotten rid of. If there's still some left, I will be very disappointed. Meanwhile, we need to see some innovation here, some new products that we're stunned by that we can't live without almost instantly. We need some green shoots of a turn in the U.S. that are at least strong enough to make us feel like we're dealing with the Nike of old, back when the stock was a winner. Now it's a loser, and it's hurting my charitable trust. Enough said.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.